In this video, I'm going to briefly discuss the reversal and the signals that we were talking about yesterday at the end of the day with the homework session, the video that I actually provided, not the written worksheet, but again, the discussion of support and resistance, whether or not we're going to be looking for reversals that would print an HL30 or if we're going to avoid it altogether. So this is the euro dollar. If you missed any part of the previous video from last night, the end of day video, go ahead and go back in and watch that. There's a link to it in the Slack channel as well. I post the link straight to the YouTube video. That's where I host them, the videos, but you can click on it right inside of the Slack channel. It'll take you right to the video and you can watch it. So you can see the discussion that I was having last night. We were reviewing whether or not the HL30 would work on a euro dollar chart. So this is a 30-minute time frame. This is the template that I use for the HL30. And we'll do a quick review. So I mentioned that about the time that I had made the video, we needed price, first of all, for it to move back down into the 10 pip range. So quickly, I'll review the 10 pip range. If we're looking at a possible HL30, let me go ahead and detach this and show you what it would have looked like at the time that we were setting this up. So it would have looked something like this at about that time after the rollover. After the rollover is when I start looking for the HL30s. And the first thing that I do is I put a support level at the previous day's low and then a resistance level at the previous day's high, and that's up here. So where price closed, it would be likely to see price approach the low first. Doesn't always guarantee, because the other day we saw that happen with the pound dollar. It didn't, it closed up towards the highs, but it never went within the 10 pip range, and it sort of just dropped and then tested the previous day's low. That can happen. They're just different, scenarios that can develop, but we're putting some structure to all of that so that we can find an obvious opportunity. So again, right at the rollover, I have the previous day's low and I have the previous day's high. Now, what I mentioned in the end of day coaching update, my assessment was that if I was to see price move down into the 10 pip range and possibly print a reversal here off of the previous day's low, that I would not execute an HL30 because it's likely to fail. And the reason is that if you look at this support low just below the previous day's low, it's a few pips away. And that comes from, let me go ahead and now put everything in perspective here. That comes from the low over here from last week. It's not that much further. So here's the previous day's low where I'm moving my cursor, and here is a low about 10 to 15 pips lower than that, within that range, and it's from last week. So if it was to set up an HL30, which it looks like it was trying to do right here, you see the 10 pip range? So the first thing that we need, if it was to be a qualified HL30, is that price needs to test the previous day's high or the previous day's low within the 10 pip range. Well, that means based on where price closed, price needs to come back down to 10 pips above the previous day's low. The previous day's low was 1.1279. That means it needs to come down to at least 89. And right here, where I'm moving my cursor, I'll expand this so you can see the details here, but it looks like it's starting to print an HL30. And I said I would not trade an HL30 because of this fact right here, which is the overall low. And very often what will happen is it'll give you an HL30 that looks qualified. Even the CCI might confirm. But if you see this scenario where there is a low just a little bit lower than that, maybe 10, 15, sometimes even 17, 18 pips. There's not a precise number, but you can see just how close it is. That's why you want to compress the charts and be aware of the bigger picture here, that it may set up an HL30 and then it won't hit the 20 pip target and it'll roll over and then come back down and test the actual support low, the real support low. And then we get a reversal, which would be a Tech 1 trade, and that would be the one that would be much more reliable, and I would trade that. So this is one of the instances where the HL30 would not work because the conditions are not optimum because of the simple fact that there's a support low. So the way you look at that, so very often you'll be looking at your chart and it'll look like, this. Maybe you'll have 2, maybe 3 days in here of data, or maybe even, just 2 days worth of data, and you're looking at the candles and you're paying attention to that. Well, that would cause you to miss what's going on. And that's why after the rollover, when you set up your charts with the low and the high, you want to tighten up the charts and bring in about a week's worth of data, maybe even a little bit more than that, so that you can clearly see where these significant levels of support or resistance are, so that you can avoid the HL30 in a scenario like this. Now, had this low from yesterday been the actual low here that I see on price when I compress the charts like this, then I would have traded the HL30 and it would have likely worked a lot better. But again, if we dissect this trade, here's where we can see the reversal. So let's go ahead and review to see how this would have turned out. So I'm going to bring in the data window over here. You can see the data. The lower box reading where I'm moving my cursor, that's the CCI reading. So one of the first things we do after the rollover, in addition to finding the low and the high for the previous day, here's the low, and we also want to have the CCI reading, which is printing a minus 104 reading. Well, here it moves into the 10 pip range and then prints a reversal, and I'd start looking for candles that are candles, close completed candles that are bullish with a higher CCI reading than the previous day's CCI reading. So again, remember the previous day's low CCI reading is minus 104, and here's the reversal pattern right here. And on that candle, it's printing minus 67. So that's a higher CCI reading than the previous day's low CCI reading, which would normally confirm an HL30. But because the conditions and the trading environment was incorrect, it was not optimum because of what we identified from last week, the actual low, which is right down here. We expected that it was going to move up, come back down, the HL30 would fail, and then it would test the real low, and then it would bounce, and it would be a Tech 1 trade, not an HL30. So let's go ahead and take a look at this. This candle closes here at 1.1296, which would mean if we were trading to a 20 pip target, 96.0616, here's our target. So in this case, it would have to move up. Now, if we put a 20 pip stop, let's see how close it gets. The close is 96, so 76 would be our stop. And 76 is right here. So here's our target. Price moves up, tests, goes back up again, looks strong. You'd be pretty excited if you missed these details and you did try to take it. Remember, this was not a good trading environment for an HL30 because of what I just mentioned. So here's what it looks like. It starts to move up. It does not hit the 20 pip target, and then it rolls over, tests the actual low from last week, and then you'd get stopped out. And this is what I'm always warning you about. When the conditions are not optimum for the HL30, this is what could happen. So this is the Tech 1 trade reversal right here. This is a bullish engulfing candle. Everything is optimized. Everything is perfect. It's bouncing off of the real support low in price. We get another test, and then it moves through, and the entry would be on a break of that high. If we see a test, if it was to break on the next candle to the upside, I would probably stay out of it, wait for a test, and then move up. I'm all about testing, and I learned that these tests confirm the breakout when they hold at the support low or the resistance level. That's part of the Wyckofffian price structure. That's part of using point and figure. These tests are what confirm that we're trading it in the right direction, and we just need to wait for a little more of an opportunity. Now, I would also improve my reading of this move to the support low and the reversal by using my futures chart on the euro and counting the waves on a 30-minute time frame to see the supply and demand signature, that weakness that we look for. Sometimes you'll see a strong candle and a lot of volume, yet it doesn't close below support, and then you get an even stronger reversal candle, which sort of stops all of that movement right there. And then we wait for a test, and then we see more volume coming in, and then we trade it on a break. And in this case, because I wouldn't be expecting much of a move, I would trade it to psychological levels. So on a break above that high, that's 89 or approximately 90, I would trade it. Well, we can't really go to the 00 because that's not much profitability in the trade with a spread. So the next level would be the 20 psychological level, which is right here. And you can see right there, it stops and tops out. It actually goes only as high as 21. So that would have been the most appropriate trade. Now, I did make a comment that there was, a lot of activity. People will see a move like this from yesterday and they see a sell-off, and then they just, a couple of minutes later, they place a buy order. And sometimes they're right and sometimes they're not. And if they're going to scalp, we don't know where their targets are. So they could easily say, oh, I picked up 7 pips. Or we also don't know where their stop loss is. So you can see it really didn't move with any great significance here. And who knows if they made any money, and who knows if they get stopped out. We trade it very specifically by looking for this one opportunity right here. By understanding the mechanics of what's going on here in these tests, and then the retests of real support lows, and then watching volume levels, counting the waves into that support low, and then the reversal and the stopping action, we can then trade it a lot safer. We don't have to worry about holding for 12 or 24 hours and not knowing what's going to happen next. We wait for specific opportunities when we know it's going to break out, and we can trade it safely. And again, we're not trading this as a big breakout move, because that's not what's going on here on the daily time frame. Let's take a look at the daily time frame. Before I do that though, I want to show you the wave counting method into support. So this is what I was talking about. This is the euro, this is the 30-minute time frame, and this is that move right here, counting the waves. We see all of this activity. There's a lot of volume here, moving right into the beginning of the London session, and you can see that this support level, that's the real support low. And notice how these these bars are holding right there at that support. Even though there's more volume coming in, there's no effort, there's no reward, there's no result pushing price lower. You see the selling coming in. There's another bar right here, 30-minute bar. That's the final bar that really holds, with some selling at 3,364 contracts. That's quite a bit on one 30-minute bar. And yet there's still no movement. There's still no ease of movement within this thing, and no result. There's no result because of all of this effort and the people that are trying to push price, traders trying to push price a lot lower below this support. And then we get a strong stopping action. This is that one that I spoke of right here. This is the strong stopping action, the bullish engulfing candle. Let's go back to the futures. And here you can see 5,386 contracts in one 30-minute bar. That's pretty strong. That's pretty significant. And then we get the test, and the test is pretty strong in itself. Remember, the previous selling bar had 3,300 contracts. This one has 5,100 contracts. And look at the close. It's high and above the support low. So there is no effort being made. They're not achieving anything. The bears here are not achieving anything. The sellers are not achieving anything on these bars. And then we see it slowly start to tick higher, and it takes out the high of the stopping action bar with 5,300 contracts. This is important. The volume and the number of contracts tells me, relative to the previous bars and the activity, what's happening here, and if it's holding, and if it's okay to get into a trade where I could put a stop just below these lows. Now, you can see here that 30-minute bar where it ran in and fell just short of the 20 target, the psychological level. This confirms the breakout and the holding that I'm looking for. 13,214 contracts in one 30-minute bar. It moves up. Let's take a look at this is that bar right here. This is the MetaTrader platform. So this one only goes up as high as 15 or 16. We wait for the next candle. There's going to be an up thrust that fails, and it hits 21. 20 is our target, and we're out. 20 is our target, again, a psychological level. So what would be my psychological levels in a trade like this? Let me go ahead and draw them here. Sorry about that. The 20. If the trend was to continue, but there's no reason for it. Again, looking at the daily time frame, the way we've been discussing the daily time frame, I'll show you that in just a moment. It's still sideways inside of consolidation. So I can only expect little opportunities like this. The next psychological level would be 50. Sorry about that. And then the next one would be 80, and then the double zero. So let's take a look at the daily time frame just before we end this. So again, going back to our daily euro dollar chart, remember the high, the range of consolidation we've been trading in for the last month. Here we had a high that did not break above that resistance, and I mentioned that it could test and pull back, maybe bounce and come back up and close above that high. If it does that, it would be possibly a continuation breakout trade on the daily time frame, but we don't have that yet, so I'm not going to discuss it. And then the day after this move right here, which was New Year's Eve, this was yesterday, Monday's trading, so that was January 3rd, we were able to sell an HL30 perfectly, worked out just the same, and here's more of that sideways consolidation. And again, this is what leads me to believe I can't expect a big move. I can't expect 40, 50, 60, 80, 120 pips on a move on a 30-minute chart like this. I can only expect to trade it to psychological levels or specific targets. And it's such a tight packed range that even if I use point and figure that reflects the 30-minute or the 1 hour chart, it's still not going to give me a setup that would be, let's say, 50 or the 80 level where I could pick up, you know, a massive move earning anywhere from 40, 50, 60, 120 pips. It's not going to happen yet. And again, it all comes down to this daily time frame here. So at the end of today, we'll assess again the end of day. I'll send out another message. We'll take a look at the possibility of trading an HL30 here off of support. Maybe it'll come back down on the 30-minute time frame. Maybe, and I'm not predicting anything. Maybe it'll hold at this level. Maybe it'll come back down and bounce off of support and then print an HL30. We'll look at the conditions then. But again, this is a perfect example of what I described yesterday with the end-of-day coaching course. The video that I warned everybody, do not trade an HL30, but trade or look for a possible Tech 1 trade, which is exactly what we traded right here. It's just a perfect, obvious setup. And for all of the reasons that I mentioned, and then again, counting the waves right into that support level gives you all of the confirmation that you need to be able to trade a bounce like that. But you've got to be specific with your targets and realistic with your targets as far as the expectations of as to how far it's going to go. And that's why I trade to psychological levels in tight ranges like this, because it works over and over and over again. Thanks for watching.